please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we're seeing some amount of a pullback, you'd have to say, for the Nifty. It was quite range bound. So now we're up around 40 odd points for the Nifty, and for the Midcap index, it was mostly flitting between red and green for the first, say, hour and a half of the trading session, but it seems to have picked up a little more pace. So up around 0.4% currently for the Midcap index as well. Singing mostly to the global tunes. So Asia is largely in the green today after the rough session that we had yesterday, post all of the controversy with regards to what's happening on the trade front between US and China. A lot of stocks in focus, which we'll be discussing over the next 1 hour. Hi, Prashant.
Ekta, hi. So, I mean, the sell-off that we saw is not, I mean, turning out to be a vicious cycle in that sense. I mean, the chain has been broken. The pass-through is not full. So we're getting some rebound, which which is basically what 50% of what the market lost yesterday. 45 points higher. So it's not a bad-looking session. It's much calmer across the globe as well as compared to what we had going on same time yesterday, especially in Asian markets. The impact of, by the way, what happened in Asia kind of sort of progressively got lesser and lesser through Europe and through the US session as well. So we got lower closes, but nothing compared to what we saw in Asia earlier yesterday. Sudarshan Sukhani is with us to talk about markets. Sudarshan, thanks very much. Good morning. Your sense in terms of the Nifty and where we are headed from here?
Well, the Nifty is now having a strong support zone at 10,700. Any breach of that support gives us a message that the markets are heading lower. Till that happens, traders are well advised to buy on dips or to step aside. I don't see this rally going much ahead. It's just a relief rally today. So the trade is to be short below 10,700 and to take intraday dips, small opportunities on the long side, so far as we are above that level.
Okay, morning Sudarshan. What are the stocks that you'd be recommending? And I see nothing from the pharmaceutical space, if I'm not mistaken.
Yes, you're right. Actually, the entire pharma space is a buy. It's an investing buy. So today we are looking at some other segments, and we've already talked how pharma is my favorite segment and will be, I hope, for the next 2 years. So that's a message to investors. Please invest in this sector. For today, we have Cummins as a short sell. This is in a bear market. If you see the chart, it's falling relentlessly. It's an easy short for the day trader. There are two day trading buys, Yes Bank and NIT Tech. Both belong to outperforming sectors, Midcap IT and private sector small banks. Both are likely to do well in a day when markets are cheerful. Keep these intraday trades and just wait for the Nifty to show us its real move below 10,700 or in a trading range.
Okay, what is that range? Again, if you mind repeating.
I'm sorry?
The range for the Nifty that you envisage at least?
Oh yeah. See, the range is 10,700 is support and 10,830, 840 is the resistance. And at this point, the resistance is much stronger than the support. So my own sense is that tomorrow or day after or someday, we are going to breach 10,700 on the downside.
Okay, well, we have a couple of Twitter queries then, Sudarshan. Jay has 1,000 shares of Vedanta, which he's bought at 350, wants to know 1 year view on the stock.
Well, I'm sorry to say it's a blue chip company, but the one year view is pretty clouded. I do not see Vedanta or Hindalco or for that matter NMDC doing much in the next 1 year. So it's very unlikely that 350 will come in 1 year's time. If he holds on, it's a blue chip, it will come sometime or the other. But the 1 year outlook is not bullish.
Fair enough. Sudarshan, we speak again. Thanks very much. Appreciate you joining in right now on this edition of Trading Hour. We have some F&O trades also lined up. Yogesh Mehta is with Motilal Oswal. He's joining in right now. Yogesh, good morning. Your trades, both index and stocks, stock futures?
Yeah, good morning. Since Nifty has got a strong support around 10,680 to 10,720 zone, it seems that market has taken support there. But however, on the higher side, market is in very much choppy range. So 780 and 830 are the respective resistance levels. So ballpark range for the Nifty would be 10,780 on the higher side spot level and 10,700 on the lower side. So overall, one should trade in this zone only, and we are now at the higher side of the zone. On the stock front, we have a mixed bag of recommendations today. We have 2 longs and 1 short. On long side, we are recommending Tata Elxsi. Yesterday also it has shown strong momentum and resilience to go down in the on the reverse of the market, and currently it is quoting at 1328 in the future segment, keeping a stop loss of 1305. Target could be in the range of 1360 to 1365 levels. And the other one is Shriram Transport Finance. Similar pattern as on Tata Elxsi. Right now the stock price is quoting at 1492.93 level in the future, keeping a stop loss of 1470. Target could be in the range of 1540 to 45. And on the short side, UPL, which has broken its crucial support of 672, 673 levels, very first time post consolidation of 2-3 months. Now it is quoting at around 665, 666 level. Target could be in the range of shorting target could be 630 to 635, and keeping a stop loss of 680 rupees.
Okay, all right, Yogesh, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies in the FNO space. Asia is picking up pace, as you can see on your screen, at the high point for the Hang Seng or the Hong Kong markets up 1.5%, and even something like the Kospi, the Japanese markets, both those indices up anywhere between 1% to close to 1.5% at this point. But focusing on some news now, Railway Minister Piyush Goyal announced yesterday that the Indian Railways would procure around 100,000 additional wagons over the next 5 years. To discuss how this could in fact boost railway infrastructure and manufacturing, we have Mr. Umesh Chaudhary, the VC and MD of Titagarh Wagons, joining in. Hi, Mr. Chaudhary. Thanks very much for joining in. Well, before we get to this 100,000 order,
hi, good morning.
There was also a statement made saying that there is a shortage of wagons because of the lack of orders, being executed by the private sector. Can you just give us a sense in terms of what the statistics stand at and what might the backlog be for a company such as yours?
Sure. Firstly, it's definitely a very welcome move on the part of the railways to have taken up this large target. I have always maintained in the past, in your shows also several times, that the railways in the current government, in the first 3 years or 4 years of its existence, concentrated on capacity building, and now it's the time to concentrate on capacity utilization, which means carrying more traffic, which means buying more rolling stock, and that is what we are seeing that is going to happen now. Now, coming to the backlog, the railways, for the last 3-4 years have been not placing much wagon orders. In fact, very few tenders were floated, very few orders were finalized. The only order that was finalized on companies like us was the order that was finalized a few months ago, out of that 9,500 wagons, where Titagarh and Simco, our subsidiary combined, received about 24-25%. And that execution has started from June and will get ramped up from July. Unfortunately, people like us did not have any of the old outstanding orders outstanding, although that was getting reflected in the Honorable Minister's overall statement. But that was for some of the public sector undertakings, or there were some other companies that had backlog orders which were not being executed. But people like us, for example, we have the largest capacity today. We did not have the orders. So once we have the orders, it takes obviously a few months to start and ramp up the production. But I believe in the next 1 or 2 months, we will be at peak production.
Mm-hmm. No, so where does the blame lie then, sir? When the minister says that, well, I'm ready to.
No, I don't think there is a.
Yeah.
I don't think there is a blame that lies anywhere. I don't think that the blame lies anywhere. It's a question of a time lag. You see, the wagon industry or any manufacturing industry is not a switch on, switch off industry. The minister is absolutely correct in saying that I need wagons and I'm not getting them. And the industry is saying that perfectly fine, we are gearing up to deliver the wagons, but you know, after you receive a contract, there are certain raw materials and other engineered products that have to be organized. And there is always, you know, whenever we are quoting also to a private sector customer, we quote that the deliveries will start after a gap of 5 months. So this is the blame does not lie anywhere. The gap lies in between this gestation period to restart production in order to organize all your backup raw material.
Mr. Chaudhary, can you tell us ballpark, what is the orders pending with the industry and how late are these orders approximately? I mean, are these from the time that these orders, these wagons were to be delivered, I mean, how many months are they running late at an aggregate level?
So at an aggregate level, the opening order as on the beginning of this calendar year, I think was about 5,000 or 6,000 wagons, out of which incidentally we did not have anything. We had 0. That is getting delivered, you know, that is in delay. Some of them is in delay, some of them is getting executed. The order that was finalized early this year was about 9,000 odd wagons. The delivery period for that is December 2018. I am pretty confident that this will get delivered by 2018, barring a few companies that may have small quantities that will be spilled over. But I'm pretty confident that this quantity will get delivered by 2018 December. The new tender that is getting floated now for about 22 or 24,000 as the quantity might be. The minister announced yesterday 22,000. So that once it is getting finalized, I believe that the wagon industry in India has a capacity to do 2,000 to 2,500 wagons a month, provided there is a long-term visibility that there would be workload for about 2 to 3 years at least. Then the industry can ramp up to 2,000, 2,500 wagons.
Okay, so you mentioned that you're a part of this 9,000 to 9,500 orders which would be delivered by December of this year. So yeah. I think maybe your order book would be around 2,500 odd in terms of wagons which need to be delivered by December.
That's absolutely absolutely right. It's about 2,300 or an odd 2,400 numbers. And we are pretty sure that we will complete it before December.
Okay. What would that mean in terms of, say, a revenue addition for you or a profit addition for you?
Obviously, you know, this is going to be a complete transformation because, you know, wagon industry, company like us, has suffered phenomenally in the last 4, 5, 6 years, 7 years, on account of non-ordering by the railways. The last large order or the sizable order that was finalized by the railways was almost 7 years ago, which was for 17,000 wagons. After that, some years the railways have just not purchased wagons. Some years they have purchased very small, even 4,000, 5,000 wagons. So it's been a very it's been a roller coaster ride wherein the roller coaster has only gone downwards till now, and now we are seeing that upward trend happening. And you know, apart from the gestation period that it takes to get the material and get the supply chain going, I'm sure that not only us but the entire industry will be able to meet up with the expectations of the railways and the Honorable Minister.
How much would you probably be bidding for from the 20 to 22,000 additional wagons which were spoken about? The new tender.
We'll be bidding for the entire quantity, but there is yeah, absolutely. So we always bid for everybody bids for the entire quantity. There is a certain basis on which the quantities are allocated. So this time it's going to be on a bucket filling basis. This is the first time the reverse auction and bucket filling is being introduced by the government. So we need to see how it is going to span out. As far as Titagarh is concerned, along with our subsidiary Simco, we have the highest assessed capacity by the railways, by the RDSO. We have been the market leaders in the past, and we hope that we would be able to continue that position in the future. But at the end of the day, I must clarify that it is a tender. In a tender, one doesn't know how things pan out, who would be the L1 bidder, etc., etc. So we need to see what the results of the tender are. In the last tender, we did get about 24-25% market share. Earlier also, we were at about between 20 and 25%. So let's see how things go forward.
Mr. Chaudhary, what about ordering from the ordering by the private sector? I mean, how is that looking?
Yeah, that's very interesting because you know that's one very positive thing that has happened in the last, and I've said this last time also in your interview, that the private sector wagon demand has again started, whether it is in terms of the container train operator, whether it's in the automobile freight train operation. Yesterday also the minister in that program of CII where I was there, he mentioned about the automobile freight train operation and so on. I think it's this is really a paradigm shift that we are seeing in the railway policy making, and more important than policy making is policy implementation. And honestly, I can say that this kind of dynamism is something that is a treat to everybody's eyes on the other side of the railways, you know, from the users, from partners in supply chain like us. We've seen the wagon investment scheme, which was stopped about 8-9 years ago after a huge success, and I really do not understand why it was stopped, because it was one of the most successful public-private partnership schemes of the railways. It brought in thousands of crores of investment to the railways in a very short period of time, and then suddenly it was stopped. And it has been relaunched by the railways for general purpose wagons. A lot of on that, a lot of inquiries have started coming. Some policy tweaking is required in that. I'm sure that that will be done. But in terms of container train operator, in terms of automobile, in terms of special freight train operators, all these private demands have started showing a very healthy trend, and we have finalized a lot of orders in the last few months.
Okay, all right, Mr. Chaudhary, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that is the outlook coming in from Titagarh Wagons. Need to take a break now.
Okay, welcome back. You're with us here on Trading Hour. The market is doing, way better than what we had yesterday. So more than 50% of yesterday's losses recovered, and this is not bad. 10,762 is what we are trading at right now. Let's bring in Manisha now with what's happening in the world of commodities and currencies. Lots to talk about, Manisha. What's on your mind, top of mind?
Well, it is cotton really, Prashant, because plenty is happening in the international markets there. Remember, cotton also features in that US-China list, and China is looking towards India now to import cotton, and that's taken our prices on the higher side. If you look at the month of June, the cotton prices in India have gained up by 6.5%. In last 1 month, we are up by nearly 12%. And if you look at the cotton yarn prices, those are up by nearly 10% in last one fortnight as well. Well, what we really have seen coming in is that India, as apart from the regular imports that it does from China, does from India, it also is added to that nearly 5 lakh bales. So some advanced registrations of exports from India to China also seem to be happening, and that clearly has been a very supportive factor. Not just China, all the other countries that India exports to, whether it's Bangladesh, Vietnam, Indonesia, etc., those export numbers also are looking quite good. And if you look at the year-on-year number, this year, this marketing year that is, India could be exporting around 30 to 40% higher as compared to previous year, anything between 7 million to 10 million bags. So that really seems to be taking the cotton prices on the higher side. Just one more thing apart from that really is that the Indian crop this time around is looking at 370 lakh bales. When you look at the Chinese output, that is while at 32 million bales, their consumption is at a huge 45 million bales. So the reason those numbers don't match is led to Indian cotton prices and export numbers looking very, very positive there. But Kunal Shah of Nirmal Bang as well now joins us to talk more about that and the other things. Kunal, I want to talk to you about cotton as well. What are the numbers that you're watching there, and the global trade disputes, especially between US and China? How much of that support do you see coming in for the agri-commodity prices in India?
The consensus view at the start of the season was that cotton prices are going to go down because of the good carry forward stock and expectation of a better sowing this year. But the entire story is changed because of the drop in Chinese production, number one. And like you rightly pointed out, the exports from India have already picked up, and with ongoing trade war with the US, it is likely to pick up. So irrespective of what happened at the US cotton, the Indian cotton prices are not going to go down in near-term future. And we believe that this rally can continue and extend because the kind of shortfall China has, India is definitely a most preferred destination for them to procure the raw material. So I believe that cotton prices can test levels of 23,000 on MCX. So not the time to go short, in spite of the fact that we have a good stock right now in the Indian market.
Oh, well, absolutely. The global cues really seem to be telling you on where the commodity prices will go. But what's also your sense on the metals as a sector? Because after 3 days of very sharp decline, today has been a day when we have seen some short covering, bargain buying come in. But do you see it holding, or do you think this is a time to sell on these rallies?
Well, I'm waiting for another tweet by Mr. Trump whether he's going to impose $200 billion worth of new just duty on Chinese products or not. On a real basis, I think it's more of a fear factor which is leading to this kind of downside rather than the actual slowdown. Or the fact is that there has been some weak economic numbers this month in China, and due to which metals should have been corrected. But I think with this trade war news, we've seen a good correction. So whichever metal is fundamentally better placed and is not likely to get affected by the US and China trade war, that should be, this kind of dip should be used to go long in that. Like for example, nickel. So the electronic car story is continuously going to drive the demand for the nickel. So I think that's not going to be affected by this, whatever is going on between US and China trade war. So I will recommend to use this dip for metal like nickel to go long at 1,005 for the upside target of 1,025 to 1,030.
One quick word on crude before we let you go. How are you looking at that, especially with the kind of statements that are coming in from various OPEC members?
Well, I don't know what's going to happen in the OPEC meeting, but my view is pretty strong, and I'm very clear that the upside in crude oil future is likely to be short-lived. So whatever spike you get in this kind of market where any statement comes out of any oil producer indicating some bull run and you see prices going up. So I think on MCX 45.50, 45.30, good levels to go short. And the moment this OPEC meeting is over, I think this rally will fizzle out, and I'm expecting Brent crude oil to test $71 to $70 and WTI to test $62 to $61.
Okay.